What's up, guys? Your reporter Quick Stocks is back. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your analysis of Best Buy, ticker symbol BB, and of course by that I mean BBY, trading for $72 a share as of May 2nd, 2020, equating to a market cap of $18 billion and a PE or price per earnings ratio of 12.5. With all of the stimulus money entering the economy, is it time for us to start a position in Best Buy? Or is CV going to be the final nail in the coffin? This is your Quick Stock analysis. So, we've got to start with the blue shirt in the room. Usually here at Quick Stocks, we take a closer look at the numbers. But in Best Buy's case, I think it's more important to look at the staggering change in its business model. In case you haven't heard, I think it's important for me to note, researchers from the Infectious Disease Research and Policy are saying that the disease may continue to spread for nearly 2 years, potentially delaying the return for normal retail operation by as much as 18 months. So what does this mean for Best Buy? Well, Best Buy has already laid off 50,000 of its 125,000 employees as of mid-April in hopes to stop the bleeding. Currently, curbside pickup accounts for roughly 70% of Best Buy's weekly sales, which is staggering because let's be honest, the main thing Best Buy has going for it is the experience. I don't know about you, but when I think of Best Buy, doing curbside pickup really doesn't tingle the same dopamine receptors. And personally, I would prefer to order my goods from someone like Amazon. But it's also important to know Best Buy will survive this, even if its only source of revenue is online orders and curbside pickup. However, Best Buy has another strategy under its belt, which personally I find kind of laughable. Best Buy is making in-store consultations available by appointment at 200 of their locations, and each appointment will have a dedicated sales associate helping the customer to ensure appropriate social distancing takes place. Give me that blue party hat and call me Zezima. Imagine walking around Best Buy like you're royalty. But for real, maybe it's just because I'm extremely independent. But the only thing that sounds less appealing to me than going to Best Buy and doing curbside pickup is walking around the store during a pandemic where you have a personal babysitter who wants to be there even less than you do. Let alone the costs of conducting business in this manner, supplying all of your employees with gloves and masks, daily self-health checks, areas of the store that will be sanitized before and after each appointment, checkout stations are being equipped with sneeze guards, etc. Now imagine if these practices were to go on as long as 18 months. That would be a GG, BB. However, don't get me wrong, props to Best Buy for taking these precautions, and honestly, I don't have a better solution for the company whose primary source of income comes from in-store purchases. And with all the newfound stimulus money entering Americans' bank accounts, let's be real, besides us degenerates who are directly depositing the stimulus cash into our brokerage account, most people, once they get that money, they're going to spend it. If your business is closed, consumers will have no problem finding somewhere else to spend it. However, there is a little bit of upside. Mid-April, Best Buy's CEO stated they have nearly retained 70% of their sales business. This obviously excludes sections such as Geek Squad. And note, they may have retained 70% of their normal business, but with delivery costs, increased wages, health precautions, etc., operating costs are surely going to increase. I'd also like to note, Best Buy's board has taken a 50% decrease in pay until at least September, which is awesome, but it's not enough. The vast majority of Best Buy's family works in direct service of their customers, and those customers cannot properly shop in their stores. This is the part of the video where I typically like to deep dive into the technical analysis of the company. However, I really don't see much value in looking at Best Buy's historical data when the landscape has changed so much since then. For this reason, I have no interest in starting a position in Best Buy, as it seems a company of its kind and size will be one of the worst affected from our current economic situation. And if you already have a position in Best Buy, we've already seen a 20% decrease in its share price from its highs, but also a 40% increase as of late March. With trends like this, if you want to be a shareholder of Best Buy, embrace yourself for the volatility, especially with earnings reported late this month. When the economic uncertainty lifts, or if we see another massive dip in share price, I'll make a technical analysis, but as of right now, it seems frivolous. Trading for $72 a share, only 20% from its highs, in my opinion, seems extremely optimistic. Anyways, guys, this was your reporter, Quick Stocks. As always, the best investment you can make is hitting that subscribe button to go long on Quick Stocks. Subscribe now at 91 subscribers and plan to retire early. I'll catch you guys in the next one.